All right. So intro to the strat. Oh, let me click on the screen. All right, there we go. Disclaimer first. I'm not a financial advisor, and this is in no way financial or trading advice. I'm simply share option trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only. There are significant financial risks involved with trading. I'm not responsible for your losses in the market. Should you decide to utilize the information and/or strategies discussed within this presentation by choosing to proceed, you are acknowledging your understanding of this disclaimer. All right. So, what is the strat? The strat is a simple way of trading. It gives you your entries and targets when used correctly. It is trading price action and it requires patience and discipline with tight stop losses. You trade using the three universal truths, which are time frame continuity, actionable signals, and broadening formations. The strat is based on trading what you see and relying on quantifiable data. The strat also helps to take the guesswork out of your trades, which is why a lot of times you will hear me say, I'm not predicting anything. I just take what it sees me. What I see is not about how I feel, it's about what the market does. All right. Because you have to take the emotions out of your trading. All right. So candlestick refresher before I get into the strat, because I know we have a lot of new people and stuff like that. So let's go over candlesticks first. All right. So what is a candle pattern? All right. It is a method of reading price charts. Some people read line charts, but we read candlesticks. All right. So what is OHLC? OHLC is the open, high, low, close price for any time frame. All right. A shadow or a wick shows the low or high of the price. If there is a long upper shadow / wick, that means buyers took the price up, but sellers pushed the price down, which also signifies resistance. If there is a long lower shadow / wick, that means sellers push the price down, but buyers push the price up. This is important because with the strat, we count wicks or shadows, whichever one you want to call it. We count that. All right. We don't necessarily mark the open or close. All right. We want to know what the open is so we know time frame continuity where what that time frame is doing. But as far as like marking entries, we mark the highest point of the candle and the lowest point of the candle. All right. So again, with the strat, whenever we're marking entries, you mark the high of the candle and the low of the candle. Because I know some people are like, well, do you mark the body? Blah, 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 blah. You mark the high and you mark the low. But this is so you understand what a bullish candle is. All right. A bullish candle is when the closing price, all right, is above the open price. All right. So whenever the close is above the open, that is a bullish candle. That candle will be green unless somebody changes the color of their candlesticks. Some of my candlesticks are different colors based off of different things, and other people just like playing with their charts and making their chart look pretty or whatever. Make it look like however way they like it to look. All right. A bearish candle is when the open, all right, is above the close. So that means the close is below the open. That's what's going to make a red candlestick. So the thought process is, hey, we open, let's say, for instance, we open at $56, right? That close, all right, would be at 55. All right, so we open at 56, we're closing at 55. That means price went lower, all right, which is bearish. I think we all like when the prices go up. If we're trying to sell something, obviously when we try and buy something, we don't like when the prices are going up, aka inflation, aka these gas prices right now. All right. So right about now, gas prices would be a bullish candle. Why? Because they opened the year at $3, and they right now, but close would be is about $5, man. Damn, gas price is too high. All right. Now, going over the most bullish and bearish candlesticks. All right. You have the most bullish. All right. That means open. Here's the close. There's no wick. All right. The second most bullish is this candle where you see sellers tried to push the price down, buyers bought it back up, and then we ended up closing green. A normal bullish candle is this right here. All right. You have a little small upper wick. You have a small lower wick. Nice big green body. All right. Then you have a neutral bullish candlestick, which is kind of more so like doji territory. All right. And then the least bullish, which sometimes in the strat we refer to as shooters. All right. And then the opposite would be the bearish. All right. Now, strat combos. So I'm going to go over this. Strat combos, you have your 2-1-2 continuation. All right. This is a 2-1-2 continuation. You have your 2-1-2 continuation. All right. So it's basically what it is: 2-1-2 reversal or 2-1-2 continuation. I'm saying reversal and continuation. But with this new strat combo sheet, all right, it's taking the guesswork out of it as far as getting you confused on candles, because the old strat combo sheets didn't have any wicks or anything like that. So it's telling you what your entry is. So whenever you look at this sheet in your own spare time, it will be in the community. All right. The red line is going to be your stop. This line up here is your entry. So that means you enter here. All right. You enter at the top of the candle. Your first price target is going to be the candle before that one. All right. To the downside, your entry 2-1-2 to the downside. All right, your entry is here, your stop is there. This is your price target. So that way you can understand it. Next week, I'm gonna go more over these strat combos, but I want you to see what it looks like and explain it, obviously, because you might end up using it this week. All right, so whenever you're looking at it, this black line is your entry, that's your target. This red line is where your stop should be. All right. Does everybody understand that? All right. Well, gas ain't $5 in Texas neither. But I just want you to see these strat combos. So we have 2-1-2. So if you hear that in the community, that's what we're talking about. 3-1-2. All right, if you hear that, whenever I say 2-2 reversal, and then you have your 3-2-2 reversal. All right. These are the things that we're talking about. All right. And again, you can see these different, like a PMG. If you hear PMG, that's a pivot machine gun. 1-2-2 rev strat. This is what it looks like. All right. And this is giving you your price targets. Because I know a lot of people on the old sheets, they would get confused with the strat combos. Most of these don't have colors on it, unless it comes to like the rev strat and stuff like that. All right. So this sheet is probably the best iteration of the strat combos. Sarah Strat Sniper made it. All right. So let me go back over it. 2-1-2. All right, means there was a consolidation. So whenever you're looking for these strat patterns, let me put this out there. When you're looking for it, this last candle technically hasn't formed yet. That's why when you see my watch list and chill, you see me mark the high and the low, because I'm like, it either going to be a 2-1-2 continuation or a 2-1-2 reversal. Based off of, there's only three things a candlestick can do. So whenever you're looking for these patterns, the last one hasn't happened yet. All right. So just act like this last one doesn't exist. All right. But it's showing you what it would look like when it actually happens. All right. So if, let's say, you saw a 2-1-2 on your chart, you would enter at the break of the top of the one. Your first price target is that 2 up before the one. All right. Or 2 down before the one. All right. So now the strat scenarios. A scenario one, all right, or basically a one candle or an inside candle. All right. This red candle in the middle is a inside candle. It doesn't break the high or the low of the previous candle. Let me get my annotation tool. All right. So it doesn't break the high up here or the low of the previous candle. That is a consolidation. That is an equilibrium between buyers and sellers. In other trading systems, this is referred to as a balanced market. All right. When prices isn't making a higher high or a lower low, that is a balanced market. All right. So that is a consolidation. And a lot of times price consolidates before it breaks out. All right. Whether it breaks out to the upside or it breaks out to the downside. All right. That's a scenario one, an inside candle. A lot of strategers love playing inside candle breaks. All right. So now let me get out of this. A scenario two. All right. This green candle right here is a scenario two. It is your directional candle. The market moves in the direction of the most twos. The reason why that is because if price keeps going 2 up, 2 up, 2 up, 2 up, that means price is constantly it's basically price is continuously going up. All right. That means it's in an upward direction. All right. If it's going down, like Netflix, all right, Netflix price keeps dropping because everything, for the most part, I wouldn't say everything, but you constantly get 2 down, 2 down, 2 down, 2 down, 2 down. You get some price consolidation. You have some shorts who take profit. but for the most part, you see those two down. So price moves in the direction of the most twos because those twos are symbolizing direction. All right. Price can't go up or down. I mean, that's a direction. If it's not going up or down, that means it's going sideways. All right. Now, this is a two down because it broke the low of the previous candle. All right. So right here, this candle right here, all right, broke the low of this previous candle. When it comes to strat patterns, you're always going off the previous candle. The previous candle tells you what the current candle is. Because if the current candle breaks the low, that's a two down. Does not matter the color. It's still a two down. A two down just means the direction it broke in. All right. It broke the low of the previous candle. It broke in that direction. Yes, price may have came back up, but it still went two down. All right. And this is also an example of a candle not being enforced. Because people are going to ask, what does enforce mean? Enforce means that if it goes two down, it stays below that previous candle's low. All right. This candle right here, you can barely see it. All right. But that's basically the low of that candle. This candle right here is a two down enforce because the close, not that the candle has to close, but the current price on that candle, whenever that candle was forming, was below the low of the previous candle, which makes it a two down enforce. All right. This candle right here, this green candle, is not a two down enforce because it didn't stay below the current price of it. The price action didn't stay below the low of the previous candle. That's how things end up going three, which we will talk about three in a second, because a three starts as a two down or a two up and it fails that direction and then takes out the other side of the range. All right. So this would be an example of something not being a two down enforce. And that kind of sets up the next candle to potentially go two down, two up reversal. All right. So let me clear this out. All right. Scenario two, the two up. A two up is a candle that breaks the high of the previous candle. All right. It breaks the high of the previous candle. So this candle right here broke the high of this candle right here. All right. This one that I'm hovering over, this candle right here, this candle over here broke the high of the previous candle. That is a two up. And this is an example of a two up in force. The price action, all right, which is the close up here, stayed above this previous candle right here's high. All right. That is a two up in force. All right. And again, you can have a red two up because the up part of it or the direction is just whether or not it broke the high or the low of the previous candle. Because we just used to say two, all right, but then it was like, all right, we kind of need to be more strict on the direction. So two up or two down. Because if you just say two, if you see a bunch of twos on the chart, nobody's going to know which one you're talking about. All right. So again, the definition of whether or not it's a two up or two down is about the direction it broke in, whether it broke the high or the low of the previous candle. All right. So now let me clear this out. So now scenario three or an outside candle. All right. A three is the opposite of a one. All right. The way I like to look at it is like the one is like an introvert. All right. The inside candle, the one is like an introvert. It likes to stay inside, likes to stay to itself. A three is like your extrovert. All right. Likes to, it's very outgoing. All right. So just think outgoing three, outside candle, extrovert. All right. The three is the opposite of the one. All right. A three starts as a two in one direction, fails, and takes out the other side. So what probably happened on this candle is probably went two up first. All right. It probably broke the high first and then failed, wicked. All right. So buyers pushed the price up, sellers pushed the price down, and ends up taking out the other side of this candle right here, the low. And now it went three. All right. So a three starts as a two in one direction, fails, and comes back through the previous range. That's why being enforced matters. If something is not enforced, it is a failed two. All right. So if it's a two up and it's not enforced, that's a failed two up. That can go three. All right. That's where you start to get your outside candle. If you follow Sarah Strat Sniper, that's where that like 50% rule comes from. All right. So that's a three. A three is again a outside candle. It is the exact opposite of a one. All right. So now we go to the next slide. So time frame continuity. All right. the next universal truth. All right. So what is time frame continuity? Time frame continuity in simplistic terms is when the month, week, daily, and 1 hour all have green candles. So if you go look at the month, that last candle, that current candle on that time frame is green. When you go look at the week, that current candle on that time frame, the last one on there. All right, the last one all the way to the right, because somebody might go all the way to the left. The last one all the way on the right. All right. If that's green, all right, then the daily, the last one all the way to the right, that current candle, if that's green, and then you go to the hour and that last one on that hour is green, that's full time frame continuity. All right. That is full time frame continuity to the upside. That means we're bullish on every time frame. All right. When it's not in continuity is when your day, let's say your month is green, your week is green, your day is green, and then your 1 hour is red. That's not full time frame continuity. All right. The 4 hour candle would matter depending on which time frame continuity you're using. All right. A lot of people mix and match, but I'm just going off like the original time frame because I got to give you the basics before you start messing with the formula to fit your trading. All right. So the long-term investor continuity is the yearly, the quarterly, the monthly, the weekly. All right. Those are the 4 time frames because it's always 4 time frames that you should be looking at. 4 time frames to get continuity. All right. The swing trading continuity, which is the one that most people talk about, is your month, week, day, and 1 hour. All right. Your day trading time frame continuity, and this is why we say 4 hour flip, all right, 1 hour flip and stuff like that, is your daily 4 hour, hour, and 15 minute. Now, with the day trading time frame continuity, what some people do sometimes because the 4 hour doesn't change until halfway through the trading day, what some people would do is they would swap out the daily and they would go 4 hour, hour, 30 minute, and 15 minute. All right. Because some people put that 30 minute time frame in there. Because a lot of times Rob will say, Rob Smith, the creator of TheStrat, he will say, if you're new, stick to the 30 and 60. That's why that guy, they have this saying 30 and 30. It's because Rob always says stick to the 30 and 60s if you're new starting out. All right. These are the time frames most people should focus on. I use this to find trades as well as what I watch when I am in a trade. All right. What would constitute long-term versus swing trader? Long-term is investing. Long-term investor, that means you're investing. That means you're holding for months, years. That's investing. That's when people add to their position. They're trying to figure out when they should add. Will you add when you get that reversal back into continuity for a long-term investor? All right. Because you're constantly trying to buy more and accumulate shares. All right. Now, this is very important. I need you to understand time frame flow because many traders make time frames more complex than it is. They tend to focus solely on one time frame while trading, whether it's day trading or swinging. That's the difference between most other strategies out there. They say, hey, you look for your 8 EMA to cross above your 21 on the 15 minute, and then they never talk about anything else other than maybe you go and get your support and resistance on the monthly, weekly, daily. But for the most part, you camp out on one time frame. All right. Time frames are simply a different way of looking at the information. For instance, a day chart has a new candle every day. So it's a way of looking at the information. So on the daily chart, that's one day's worth of information. All right. A 1 hour chart, every hour you get a new candle. All right. So that's splitting up the information into hourly chunks. All right. Same way with the 15 minute. All right. It's just about the way of breaking down that information because that same trend, if you see an upwards trend on the 15 minute, if you zoom out to the daily, it's just going to look like one big green candle. Or if it's been dropping, it's just going to look like one big red candle. All right. So it's just a different way of breaking down the information so you can see it. All right. Because at the end of the day, reversals start on the smallest trend and trends and trends to the bigger time frames. All right. So for instance, let's say a stock has been running, it's just green candle, green candle, green candle, green candle, kind of like what Apple did, like I think it was like a couple weeks ago. It just went two up, two up, two up, two up, two up. Well, when Apple started to pull back in reverse, it starts on the lower time frame and then it ends up leading to the higher time frame. All right. So like, let's say for instance, the first red candle was on the 1 minute. All right. It went two down. And then that led to the 5 minute going two down. That led to the 15 minute going two down. That led to the 30 minute going two down. That led to the hour going two down. All right. Once you can calculate that information and have an understanding of time frame flow, you will understand that time frames, they flow together. All right. So 5 3-minute candles make up one 15-minute candle. Four 15-minute candles make up 1 hour candle. It takes two 30-minute candles to make 1 hour candle. All right. The reason why you have to understand this flow is because when we're saying hour flip is coming up, or the 30-minute flip is coming up, or the 4 hour flip is coming up, a lot of times you will start to see price action setting up that next hour or setting up that next 30 minute. For instance, there's two 30-minute candles and a 1 hour candle. All right. 30-minute candles. You get a new 30-minute candle on the hour flip along with the hour. All right. So you get one 30-minute candle then, and then you get the back half of that hour candle on the 30-minute flip, which is the top of the hour. All right. So you get the hour flip at the bottom of the hour, depending on how you got your chart set up, and you get the 30-minute flip at the top of the hour. That last 30 minutes of that hour candle is going to set up the next hour candle. So either that last 30 minutes is going to negate what the first 30 minutes of that hour did, or it's going to continue to go in that direction. That's why the flips matter. All right. This is why we say hour flip, 30-minute flip. Some people even say 15-minute flip. All right. Because that back half of the time frame is going to set up that next time frame. All right. It's going to tell you the probability of what's going to happen, what may potentially happen. So you can go ahead and start looking for a setup. All right. That's why you need to really understand time frame flow and how these different candles make up the higher time frames. All right. Now, just a time frame continuity comparison. You had your Qs, right? I didn't have the yearly chart on there because I went I went so far down in time frame. But if you go look at QQQ, we're red on the year, red on the quarter, red on the month, red on the week, red on the day, we got literally full time frame continuity down to I think everything except for maybe the last 5 minutes of the market Friday. QQQ, I think might have had a bullish candle or whatnot. But for the most part, red on every time frame. That's literally so much of a full time frame continuity, can't even comprehend it. Because most times people look for it on 4 time frames, but literally on every time frame on QQQ is red, except for, like I said, I think the 5 minute. Now on MO is green on the year, quarter, month, week. But Friday, it was red on the daily, 4 hour, 6 hour. That's a right there. You don't have time frame continuity, especially if we just focus on the month, week, day, 1 hour, which is the 60-minute. That's an example of not having time frame continuity because your day is red and your 1 hour is red, while your week and month is green. All right. So this is MO would be an example of not having time frame continuity. QQQ would be an example of having time frame continuity. All right. Now, I know a lot of times people say you shouldn't focus on the year and quarter, but that is important to focus on. And next class, I will be going more in depth on the strat because so many gems to unpack. It's hard to fit it in just one class. But I would go over like why the year and quarter is also important to look at. All right. So actionable signals. So the actionable signals for the strat are your hammer, your shooter, your Momo hammer, and your Momo shooter. All right. Now, the difference between a Momo shooter and a regular shooter is the Momo shooter in this case, because it's the first one we're going over, this yellow candle right here. Most of the time, the Momo shooters are inside candles. They're a lot better when they're inside candles. All right. But the Momo shooter, it's about where it's at. This shooter is taking place in the trend. All right. So we're already going down. This happens in the trend, whereas the shooter happens at the top of the trend. But the shooter is going to be right around the body of the candle. Is going to be where the close of that 2 down is. All right. Because this candle, this red candle right here, all right, is a 2 down. All right. I know you can't see the candles before it, but I didn't want to have too much picture on the chart. All right. This is a 2 down. The Momo shooter is going to happen in the trend. It's going to form around that close. All right. The body is going to end up being around the close like it is here. And then the next candle goes 2 down. And that's why you see like this candle on a nice Momo shooter. All right. That 2 down is going to be bigger than this initial 2 down. Like that's why it's called like a Momo shooter. Even though Rob doesn't believe that price has momentum because it doesn't have mass. But that's when you get that large pop to the downside. All right. For the Momo shooter, obviously it's the opposite for a Momo hammer. All right. So again, this is a signal that happens in the bearish trend. All right. What happened is buyers tried to push the price up. Let me clear some of this out. Buyers tried to push the price up and sellers pushed the price right back down, which signifies that sellers are still being more aggressive. They might have just even took profits. All right. Because whenever you're shorting a stock, I need everybody to understand this. When you short a stock, you sell to open your position. So if you sell to open your position, you have to buy to close your position. All right. You have to buy to close. So that's why you have stuff like the Momo shooter form, or maybe you get that, we call it TTO, corrective activity pullback. That's why you get that. All right. Shorts have to take profit, but they buy to close. And a lot of times that's where dip buyers get crushed because they like, oh, this is just the dip, buy the dip, buy the dip. They get in thinking that here's a push up. We're about to start, the uptrend, when it was just shorts taking a break, taking some profit off the table, being responsible. All right. So let me clear all that out. So that's a Momo shooter. All right. A Momo hammer is the opposite of the Momo shooter. All right. A Momo hammer happens in the uptrend. All right. So it happens in the uptrend. All right. So as you can see, the difference between a regular hammer and a Momo hammer is, again, it happens in the uptrend. Some buyers probably took profit. All right. Maybe some short stepped in, but buyers pushed the price right back up, which is why you get this wick right here. All right. And then we go two up. So it's like a 2-1-2 continuation. But again, it happens right around the close. The body ends up being right around the close of that previous two up. That's what makes it a Momo hammer. All right. It's moving in the uptrend. All right. And then the next candle goes two up. We get a nice break to the upside. All right. So let me clear all that out. So that is a Momo hammer. Oops, click it. Now, a regular hammer, as you can see, happens at the end of a downtrend, or basically it's a two down. All right. So this candle right here is your regular hammer. All right. And that's, again, a lot of times at the bottom of a downtrend. As Kay would say, when you think hammer, think build, to build something. All right. With hammers, you build things. So you build things up. Probably didn't say it quite like how she likes to say it, but that's how you should think about a hammer. Hammer, bullish, you like to build the uptrend. All right. And the best hammers, besides just the Momo hammers, because a lot of people, sometimes they'll see a hammer at the top of the uptrend, and that could be something else. I forget what it's called, but that's a different type of candle pattern. All right. So hammers happen at the end of the downtrend. Momo hammers happen. It's a lot of times they're the best when they're actually still inside candles. They don't go two up, but they happen in the uptrend. All right. A hangman. Appreciate that. So don't get those two confused. All right. Don't get your Momo hammer and your hangman confused. All right. That's why I said the Momo hammers are better when they're still inside candles. All right. Then you have your shooter. Your shooter happens at the top of the uptrend. All right. And that's a lot of times your shooters and your hammers tend to lead to those 2-2 reversals. All right. So right here is an example of a two up. All right. Two up, two down reversal. All right. And you see where the entry is where I marked it. All right. So your entry would have been here for this two up, two down reversal. As well as with this shooter right here, it wasn't a two up in force. Even though you can barely see it, it was not still above the previous candle's high. So it's also a failed two up. All right. So a lot of times your shooters and your hammers, your regular shooters and hammers are going to lead to those 2-2 reversals that I personally like. That's like my favorite. People ask me what's my favorite all the time. It's the 2-2 reversals. All right. Conflicting two up, that's something I used to call it. But the official word is a failed two up. Unless it stays in force, then it still would be a conflicting two up. All right. Shout out to you, because I think I'm probably the only person who called it a conflicting two up. Now broad informations. All right. What is broad information? Broad information, I didn't put it on here, but broad information, because people are like, why are they useful? Broad information is the support and the resistance of the strat system. All right. That is our support. and resistance. We don't believe that support and resistance is horizontal. A lot of times people see, oh, it broke my resistance just to see price come back through it. All right, and trade to the downside. So, or support, they'll see price action break through support and then come firing right back through the range. That's why we don't believe support and resistance is horizontal. We believe it's more like at an angle. All right. So broad information is how price discovery works. Price aggregates because we know that there must be a buyer for every seller. All right. There must be a buyer for every seller. There's never more buyers than sellers. All right. This is why we tell you to look for volume on the option contracts. All right. And open interest. Because if nobody's buying or selling that contract, let's say you happen to get in that position, you might not have anyone to sell it to. So there must be a buyer for every seller. The difference is who's more aggressive. All right. Who's more aggressive? All right. Are the buyers doing limit orders? Or are they doing market orders? If they're doing market orders, that's aggression. If they're doing limit orders, that's passive. All right. Same thing with sellers. Are they doing market orders or limit orders? If they're doing market orders, that's aggression. If they're doing limit orders, that's a passive seller. All right. Those are the differences. All right. Between one, the price going up or the price going down. It's aggression. Which side is being more aggressive? All right. There must be a buyer for every seller. The difference is, are they hitting market orders or are they hitting limit orders? All right. So most trading is done by computer and algos. And again, hitting the bid or taking the offer slash ask is that market order, limit order thing. So if you don't understand what the difference between a bid or ask, it's going to be, if you're a buyer, you bid. You're bidding. When you bid for something and you're a buyer, that is a limit order. That is a passive order. All right. To be a aggressive buyer, you hitting the ask. When you hit the ask, that's a market order. All right. And then vice versa for selling. Now, how do you find broad information? One of the easier ways to find broad information is scenario threes. All right. So if you find a 3 on a monthly time frame, if you zoom down to a lower time frame, that would be a broad information. If you find a broad information, if you find a 3 on the daily and you go down to the lower time frame, like the 5-minute, you will see a broad information. So that's one of the ways you can find a broad information. Just look for 3s and then go down a time frame or down 2 time frames, you'll see the broad information. All right. So how do you draw it? The way I teach to draw broad information is, one, you have to draw from a high to a previous lower high. All right. You can't draw from a high to a previous higher high. All right. That's when you start to get these angles right here. Let me show you what I'm talking about. That's when you start to get, like, if you're drawing from a high, let's just say this is a high, and you draw to a higher high, you're going to get like a channel. All right. And I couldn't even draw to it directly. All right. You're going to get like a channel. A broad information should look like a less than sign. That's how a broad information should look. A broad information should not look like this. A broad information should not look like that. Those are channels. A broad information should look like this. All right. A less than sign, because greater than is going the opposite way. So this is what a less than sign looks like. All right. So look like an alligator mouth or Pac-Man. If you kind of like drew it back like this, it looked like Pac-Man or Pac-Woman. Or I don't know, the way society is going, maybe Pac-Man doesn't claim a gender. I don't know. It's a unicorn. But that's how you draw broad information. All right. The way you find it is you would just want to see where price reverses. All right. So wherever price reverses, that's where a lot of times the broad information is. So like you see here, price reversed up here. So let me show you. Let me annotate. All right. Price reversed right here. This 3, all right, this blue candle, this 3, that's the reversal. A 3 is a 1 bar reversal. All right. So you can see where price reverses up here. And then you can also see where price reverses down here. So you get a 3 off the top of the broad information. And then you get a 2 down, 2 up reversal off the bottom of the broad information. That's how I know the bottom and the tops. I don't try and pick anything. If you can't see it, I don't know what's going on, but you should be able to see it. All right. You should be able to see it. But that's how you get that's how you see where to draw to. So all I did whenever I was drawing the broad information, all I did was draw from this 3, because this 3 is a little bit higher than this 2 up right here, back to here. Or if you started from this candle, because it looks like price might be about to reverse, and it did on the lower time frame. I drew this on a weekly, but if you went to the daily, price already did reverse off the top. That's how I know it's the top. You can also draw from this point back to this 3. All right. So when you're drawing your broad information, you draw from the current high back to the lower high. All right. You draw from the low back to the higher low. And that's how you get that broad information, or basically like Pac-Man. All right. Pac-Man look a little slow right here in that drawing, but you get what I'm trying to say. All right. Now, reversals, how to play reversals. The best way to start out when you're playing a strat is to play reversals back into continuity, or reversals off the bottom of the broad information. Again, you'll know it's the bottom because price reverses. All right. So I have an example for that. And that's why a lot of people in the group are saying they're playing the 30 and 30. They're taking reversals on the 30, like back into continuity, and they're hoping to get 30%. So Facebook was a good example. I know it's a little bit blurry, but Facebook, if we look right here, all right, we had a 2 up, and you can barely see it. This ain't the best example. I'll probably have to go to the actual chart, but you have a 2 up right here, and then you get the 2 down. All right. That's a reversal back into continuity. All right. You have a 2 up, 2 down reversal on the daily, going back into a red year, a red quarter, a red month, a red week. All right. So that was a daily reversal back into continuity that ended up triggering the 2-2 continuation on the week down here. That's a perfect example of taking a high probability trade. You took a 2-2 reversal. It's TOS. That's the charting platform. I actually will probably go to TOS right now. But I just wanted to highlight that real quick. Let me clear this out. So I'm gonna go back to it. I'm gonna show you it on the actual chart. This is like real blurry. I'll show you that on the actual chart here in a second. All right. It didn't turn out like I wanted it to. Clear all my drawings. It looks, I can see it, but probably screen share wise, it doesn't look good. So to review, this was just a simple breakdown of the trading strategy. I will go over it more next week. I just wanted to actually like get the start. All right, lay some groundwork, and then go show you some better examples on the chart, like looking at Facebook. There are plenty of resources on it on YouTube. Benzinga did an interview with a few different stratters. The creator of the strat is Rob Smith. How you can find him is his Twitter is Rob in the Black. So ROBINTHEBLACK. And his YouTube is Smiths in the Black. SMITHSINTHEBLACK. Tell him I sent you. But that's how you can actually find him. All right. Because he's still alive. And he makes, strat time reports on YouTube and stuff like that. And he says stuff on Twitter. Now, follow me on my social. My social is TheStrat Uchiha. All right. TheStratUchiha. All right. Strat Uchiha. For whatever reason, people be want to say Uchi Coochie, but I don't know why. All right. So let me actually go to the chart. So here's Facebook. All right. You should be able to see it a lot better. All right. So Facebook, again, on the daily, did this 2 up, 2 down reversal. All right. So that's a reversal back into continuity, because on this day right here, Facebook was green. So this was a green day. So on Facebook, before these candles happened, it technically would have been a green day, a green hour. All right. So the daily in 1 hour would have been out of time frame continuity. All right. Then Wednesday, we got the 2 up, 2 down reversal on the daily back into time frame continuity. All right. And at first, if I actually go right here to the hour, we kind of like gap down. So we also got like the gap down back into continuity. All right. So this day, this price action right here was was Facebook on this day right here, Tuesday. And then the next day we gap down, and then we start back dumping. That also led to Facebook going outside month. All right. Right here, you can see where it actually goes outside month. All right. It kind of triggers it. What is that? Thursday, then Friday kind of like gaps up slightly, but actually re-triggers it. And now it's, a 3 and 4 or whatnot. So Well, technically, once a three, always a three. So, but a lot of times for me personally, I like threes when they're like this. So let me actually maximize it. So like me, I like threes when they're like this. All right. It's well, once it went three, it stayed above that high. And then you see you get the push up in price. Right here on this three, even though it didn't actually reverse back to the upside, Walmart did that for those that have been following Walmart. But a lot of times I personally find threes to be stronger when actually they go three and they break the other side, they stay above or below that other side. That's a much stronger, this is a much stronger bullish candle. And obviously a three that doesn't have too much wick and stays below the lower of the previous candle is a much stronger three. So I like those personally much better. All right. I like Itachi and Shusui. Those are my favorite Uchihas. But that's what I personally like better. All right. So ultimately, that is the strat. Now, a lot of times with time frame continuity, I can probably go over it a little bit here. A lot of times with the time frame continuity, it's not just enough for that candle to be red. The next level of time frame continuity is having a directional candle. All right. So you want a directional candle. You don't want an inside on that candle, not like on that time frame. Inside candles are consolidations, but the higher the time frame, the better the inside candle because it doesn't chop you up as much. And it also depends on how big that inside candle is. All right. So like if it's an inside candle on the month, that's not bad, but an inside candle on the hourly chart, that's horrible. That's where a lot of people be like, man, I'm done for the day. They get frustrated and stuff like that. But like with Facebook, we're red on the year. All right. What makes Facebook being red on the year is it's a two down. It's not a red two up. It's a two down. Like this one right here was a red two up that wasn't enforced. It almost looked like it was going to go three. All right. But it's better when you have a red year and it's a 2-2 reversal on the year or some type of reversal on the year, but that yearly candle is a two down. All right. And it's a two down enforced. This yearly candle on Facebook is enforced. Why? Because the current price action is at 184.11, which is much lower than last year's low. Which, if you think about it in context, Facebook is lower than it ever was last year, this year. All right. So price is lower this year than it ever was last year. That's bearish. All right. And it still is lower than that. And it's making new lows this year. All right. And if Facebook keep poking down and it hit our yearly price target, then it would be lower this year than it ever was the last 2 years. That's bearish. You see what I'm saying? That is bearish. Now, twos are directional candle. Ones are inside candles. All right. My ones are yellow. So on my chart, I have it to where my ones are yellow and my three candles are blue. The difference between how you would know it's a bullish inside candle is it won't be filled. If it's filled, that's a bearish candle. As you can see just by looking at it, my green candles aren't filled. My red candles are. That's how I can differentiate. Now, if we go to the quarter, you'll see we just went two down on the quarter. So now not only is the year red and the quarter is red, the year is a two down in force and the quarter is a two down in force. That's bearish. All right. We go down to the month. We just went outside month to the downside. All right. That's very bearish because a outside candle is a one candle reversal. Now, some that might confuse people. When I say a three is a one candle reversal, what I mean is a three is a single candle reversal. That means that means the reversal happened in just that one candle. All right. In that single candle, it reversed. All right. Price went up, it broke the high. Then it went failed two up. It started coming back through the previous range. It went three. All right. That is a very strong reversal. In other systems, they just refer to it as a engulfing candle. All right. So you have a red year that's a two down in force. You have a red quarter that's a two down in force. You have a red month, which is a three. All right. And so far, that three is still below last month's low. All right. And then we go down to the week. All right. We have a two down on the week that was in force. All right. It hit its price target, which was the bottom of this three. Now the next price target on the week would be right here. this 182.56 level. And Facebook has earnings this week, and it could get ugly. Like it could get real ugly. All right, potentially, unless they say something good, which I don't see how. But ultimately, that's the next way you want to look at time frame continuity. Are on those time frames, is the candles directional, and are they enforced? All right. So enforced means that, like, for instance, if it's a two down, like this candle is right here. Let me delete this, remove drawing. This candle, oops. This candle right here, all right, is a two down enforced. Why? Because price action, delete these lines. Because price action stayed below the previous candle's low. So it's a two down enforced. All right. That's a two down enforced. The reason why that matters is because this is how threes happen. It went two up first, and then it ended up being not enforced. It failed, and then it goes and takes out the other side. All right. That's how you get those three candles. So that's why being a two down or two up enforced matters. For instance, right, this candle went two up, failed. All right. It's not a two up enforced. Why? Because the price action is not above the previous candle. All right. So this candle's price action is no longer above this candle's price action. An easy way to tell that is the body still above it. All right. Which a lot of times is the close, but a lot of people misinterpret me saying that as the candle has to close to be enforced. No, the close will tell you where the current price action is. All right. I think how they would have did the candles, instead of saying the open and close, they probably would have said the open and current price. But then people would be like, well, 3 candles ago, if we're saying that's the current price, then blah, 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 blah. So that's why they just said close. But technically the close of the candle is where the current price is. All right. The month technically hasn't closed yet, right? But if we look at the close is 184.11. That's where price action currently is. If price action pushed down lower, the close is going to change to whatever that current price is. All right. So that's why that matters. All right. That's why being enforced matters. If it's not enforced, it's a failed two up or a failed two down. That's how you get 3 candles and all those good things. All right. Spies, they failed two up and triggered the 50% rule before pulling back. Yeah, things are pretty bearish. But overall, that's really just what I wanted to go over. I felt like the class was going to be longer, but I kind of like didn't include a lot of things I want to go over next week, breaking it into, 2 classes, because I don't want to overwhelm people. So other than that, how does everybody feel about the class? If you liked it, if you understood it, put a 3 in the chat. All right. Bet. Well, ultimately, I know I have put the class to 6, but I thought maybe I might teach longer. But ultimately, the hour block is about to be up. All right. We'll go over it more next week, and I will make sure I leave time next week for questions to be asked. But feel free to, inbox me in the Discord and ask your questions. All right. That way, anytime I'll get back to you as soon as possible. Like if you write me at midnight, I don't know how soon I'll respond. Sometimes I'm up, sometimes I'm not up. But if I'm up or whatnot, I'll make sure I respond to you. So if you have any questions or whatnot, feel free to reach out. Um, Oxy, yeah, I'll try Oxy real quick. Um, Other than that, Kay is on vacation right now. For the new people, I'm not your only option provider. Me and Kay do these classes together. She's just on vacation right now. All right. So she'll be back May 4th. All right. So look forward to that. I look forward to that. I miss Kay. All right. But we talk every day. So I mean, whatever. But yeah, she'll be back May 4th. So you have 2 classes with just me, but I'm not your only option provider. All right. Please don't forget about her. All right. So Oxy, right now, if we start on the year, right? Oxy is a 2 up in force on the year. Why? Because the current price, 56.62, is higher than last year's high. All right. We're actually higher this year than we have been the last 2 years on Oxy. How I know that? Because one, we're higher than last year, which is this candle. We hit this price target, all right, which was 47.58. That means that's the high of 2020. So the last 2 years, Oxy, the price right now is higher than those 2 years, and it's still higher than both those years. But to be enforced, it just have to be higher than the previous candle. All right. So we're 2 up in force because price action right now is currently still higher than last year. All right. The previous candle. All right. We go to the quarter. All right. We did go 2 up, but this is one of those examples of not being a 2 up in force. So we are not a 2 up in force on the quarter. Why? Because current price is not higher than last quarter. Last quarter, the price was 63.24. Currently, we are 56.62. So we are not a 2 up in force on the quarter. All right. Go down to the month. All right. The month, the same thing. We're not a 2 up in force on the month. We have a red month. So we have a red quarter, red month. We have a green year, but we have a red quarter and red month. All right. And we just started this quarter. April was the start of a new quarter. Now on the weekly chart, as you can see, price kind of just been consolidating in here. Maybe some people call this like a bull flag or whatever. I don't know. Maybe a wedge. I don't do those type of chart patterns. But we ended up going 3 last week on Friday. Like I showed and charted on the watch list and chill that I dropped Thursday night. But we ended up going 3. So from here, either we go inside, but right now it look like it's actually gapping down. So it might actually open like down here, but we may potentially go 3-2 continuation on the week. All right. And then these would be the price targets. So if we end up going 2 down on the week and we start hitting these price targets, we either could fly all the way down or we could just take out these 2 and then start to poke back up and maybe form a potential 3-2-2 reversal back to the upside. Because Oxy been running like crazy. Like, man, we've been talking about Oxy since it was $30. You know what I'm saying? At one point it was 60. And then on the daily time frame, it went 3-2. So this would be an example right here of a 3-2 continuation. All right, because this 3 is a bearish 3. So this is what a 3-2 continuation looks like, and one that's enforced. This 2 down right here is enforced because the current price is 56.62, which is lower than that 3. All right, because this one right here went 3-2, but it didn't go nowhere. All right, a lot of times when you see the price ain't going nowhere, that means they might want to go ahead and go back up. All right. I don't know if it's enforced. I want to say enforced, not enforced. You know what I'm saying? Because enforce, ENFORCE, means I'm enforcing something. I think enforce just, I don't know. Long story short, you know what it means when I say enforce, right? So, yeah. But hit the Hennessy. I ain't got nothing to drink right now. But that's the class. I will catch y'all later. Feel free to message me. Let me stop recording.